All right. Live on YouTube, live on LinkedIn, episode 183. Perfect. Live on LinkedIn, correct. Sent the message to people on WhatsApp. And there we go. 183rd episode of Thinker's Frequency. Done. Done. There we go, folks. Let's begin. I'm very late today, so shouldn't wait for the sound check. Folks, good on YouTube. I am good on LinkedIn. Let me check my LinkedIn. Yeah, I'm good on LinkedIn. And should we begin? Yes. Bum bum bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! But before we go, we have this tradition, right? The sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. My God. Let's do it again. Sublime. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we're in this together, which is such a beautiful thing to say. With that out of the way, let's begin. Very interesting stuff happening, folks. If you remember, we talked about Dr. Burry and his shot on AI and NVIDIA and Palantir and so on and so forth. The very interesting thesis that he painted, right? He's come out with a statement saying Tesla is overvalued and has been for a while. So he pointed out a few finance things like it hasn't done buybacks and so on and so forth. And Tesla's revenues haven't grown for 2 years now, 8 straight quarters. It's losing market share to companies like BYD and Xiaomi, and its European sales have not been growing. Its earnings have not been growing, and yet it is valued with just net earnings of about $5 billion. It is valued at $1.8 trillion, right? And a very good line he said was, I'll just point that line out for you. Okay. He says, Elon cult was all in on electric cars until competition showed up. Then all in on autonomous driving until competition showed up. And now is all in on robots until competition shows up. That's what he said. That's what he wrote. Very interesting. Very well said, right? But he hasn't yet placed a shot on Tesla. Can you guess why? Can you guess why he hasn't placed a shot on Tesla yet? Huh? Because as Mr. Peter Thiel says, you should never bet against Elon, right? It doesn't make sense to bet against Elon. He's just, some people are, you know, very, very. So this is a badass statement, what Mr. Burry has pointed out. The whole competition showed up poetry. Very well said. But there's another poetry which Mr. Musk said, which was also pretty good. He said, the graveyard is full of my enemies. The graveyard is full of my enemies from the past, right? And this has been a very interesting relationship, Mr. Musk and Mr. Burry. Mr. Musk has clear admiration for Mr. Burry, despite him being a shorter of Tesla stock in the past. So he says, you're here, even though I hate you, asshole. Something like that, he said. It was a proper tweet correspondence. So that's what's happening. No shots, but a lot of activity happening, right? So let's see what happens there. Very interesting. ET has published a whole report about is AI a bubble, with the whole cross transaction thing and so on and so forth. We've been discussing about that for months, so we won't say. Speaking of things that we've been discussing, folks, did you look at silver? It came up 10K. It rose by 10K. Did you look at gold? It rose again. So silver in the last 12 months has doubled, and gold has returned 60%. 60%, right? A lot of, obviously, this signals a lot. Now let's move on. Let's move to things that we've been discussing and how things have been evolving. So we talk about looking at history as a story, right? As a process, not a collection of museum pieces. That's exactly what's happening with this government SIM binding clause for the OTT apps. So if you remember, telcos have always been over-regulated when it comes to data security, spamming, and so on and so forth. All of those aspects have always led to over-regulation of telcos, but very less under penetration when it comes to OTT apps, because can't screw with the big tech, right? They have all the muscle. Now just see what happened. Just yesterday, we had a news saying that the Department of Telecom has come forward with this, diktat that SIM binding will have to happen. Okay? Just today, read the headlines. Government makes a friend request you can't refuse. Big brother vibes. Sanchar Saathi and SIM binding mandates a privacy concern may hit companies' business models. Is that a coincidence? Do you think it's a coincidence, folks? That, just after the announcement of government's move to lay its groundwork on the SIM binding operation for valid concerns, right? Because there's a lot of spam fraud happening, financial fraud happening using these apps, right? Suddenly, they talk about Sanchar Saathi and SIM binding as a threat to business models. Do you think their business models are in trouble, folks? Do you think their business models will get affected by SIM binding to a degree that they become unsustainable or so on and so forth? No. It's just that whenever you try to regulate the big tech, it attacks you from all places. It won't be a surprise that this particular mandate or this particular move by the government will be looked at by the advocacy groups as an overreaching act towards censorship, towards anti-privacy norms, and so on and so forth. So just wait and watch how these things. This is just looking into the future. This is predicting the future, as unambiguously as possible. Government came out trying to regulate these people, right? Today's headline is government makes a friend request you can't refuse. There is going to be privacy concerns and hits on business model. Then there's going to be advocacy groups, right? These NGOs, these led NGOs who talk about how the government is trying to censor and track and so on and so forth. So, very predictable, but this is what happens when you try to rein in the big tech. What do you think about that? How does it make you feel, folks? Handset makers could fake penalties for non-compliance. Sanchar Saathi must be pre-installed in 90 days. Compliance report due in 120. WhatsApp workflows calling may break. Industry wants of privacy and UX disruption. We're talking about UX disruptions, okay? Tech industry calls it DOT overreach into METI's domain. DOT directives fall under Telecommunications Acts. OTT apps considering legal challenge to DOT. That's what's happening, right? So if you look at Sanchar Saathi mobile applications as a part of Centre's drive against digital scams and fraudulent calls. That's one of the moves that the government wants to have, and they're trying to position it as a privacy play. Just imagine people like Meta, people like WhatsApp, who are basically listening to everything you say, positioning Centre's Sanchar Saathi, trying to combat digital fraud as a threat to privacy. This is a joke. This is a joke, but not a funny one, right? This is just pure big tech muscling. And it's only going to get rougher. So more rough. Rougher isn't a word, right? Rougher. More rough. So let's see what happens there. Speaking of jokes, folks, Supreme Court has said that farm fires are not to be blamed for Delhi's pollution. They say farm fires are not the reason. Farm fires have decreased. So try to find out the reason. These people are... we should use F words, right? When it comes to such a bunch of bullshit, right? There should be some provision to let go of censorship when it comes to facing this level of intellectual dishonesty. Are we going to pretend that it's not the farm fires? It could be construction dust, it could be vehicular pollution, it could be something else. Just because we don't want to hurt a politically charged area. I mean, it's just... And why is it politically charged? I mean, isn't farm fires just a bad thing in general? How is it politics, right? But this is what's happening. Supreme Court is not willing to admit that farm fires are the singular reason. Because if there is a singular reason, there could be a singular solution. And that could be political, right? So, very weird. That's why we don't talk politics. Can't single out farm fires for Delhi air, says Supreme Court. Moving on, folks. Great wall of regulation. So this particular day somehow is very heavy. A lot of news, okay? A lot of happening all over the world. So when it comes to India, there's so much going on. They released a bunch of reports, right? The November PMI, the November industrial reports, and so on and so forth, export reports and so on. So the PMI has obviously gone down in November, and you know why, because it was overheated for a couple of months. That was running up to the festive season. Now all that festive season play has sort of being managed. So now PMI has come down from 59 to 56 or something of that sort. PMI above 50 signals expansion, below 50 signals contraction in factory expansion play. So that's what's happening. Some numbers, they all signal that October, by the way, October numbers say that, factory output was essentially 9-month low in October. So now this might just be a news which might surprise you. Wow, factory output 9-month low. But that doesn't mean anything, because factory output was supposed to be low in October. A lot of festive days and so on and so forth, right? So all of those things are leading to some tepid numbers when it comes to industrial production, industrial output, factory numbers, PMI and so on and so forth. But that's all very, very cyclical. So don't panic if you if you if you look at those numbers, right? Because some numbers are still okay, right? The car numbers, huge car sales, double digit growth, sustained momentum. GST collections still up, rise in November after rate rationalization. This is counterintuitive. You expect them to go down, but they didn't, right? And so on and so forth. The Black Friday sales jumps and so on. Everything is sort of in the range, right? But there's a lot of news, lot to unpack. A great wall of regulation bars China electronics companies to path funding. This is in relation to Hire's idea of investing 1,000 crores to expand capex in India, right? Hire was looking at that. Then other electronics companies were looking at the Chinese companies were looking at investing in India, expanding operations. Seems like Indian regulation has bottlenecked it, right? So when it comes to these particular uh, expansions from China, external commercial borrowing only way as P3, PN3, participatory notes 3 pending. So when these subsidiaries of foreign companies, they come to India and they want to invest in India, right? There are ways to do that. It cannot be a simple equity injection. It's not vanilla. So participatory notes have to be, taken in consideration. Those are pending regulation. Now the concern is it a planned pending of regulatory hurdle? Is it a planned regulatory hurdle, or is it just Babu Shahi slowing things down? Because India is effectively looking at opening up to Chinese money, right? India wants Chinese money. India wants electronics component manufacturing to grow in the country, even if it's through Chinese money, they want it, right? Then why are we not being able to approve these participatory notes when it comes to Chinese companies' investments in India? Is it Babu Shahi slowing it down as always, right? Or is it some strategic regulatory hurdle which has been placed by the country? I don't think it can be the latter, because India has specifically opened themselves up in this direction to be able to get their money. We need all the private capex we can get. So that's what's happening, folks. Xiaomi's 4,820 crores locked in India as of September, hires 1,000 crores. 8 out of 10 smartphone brand companies are Chinese, right? Higher number 3 in for appliances, in TVs by revenue, and so on and so forth. So Chinese companies using ECB proceeds for working capital, general purposes, and factory capex. We need all the capex in the world, and we are not able to get it because most of the funding is through external commercial borrowings route from related parties. Till PN3, participatory notes, get approval, these entities funded operations through equity capital, right? So that's what's happening. Lack of PN3 approval for equity. Very weird. Two key shifts are emerging, says Mr. Manjunath Madhubal, that could significantly reshape the global landscape. The rising momentum in silver and Japan's decision to increase interest rates. The whole carry trade play, right? We've discussed Japan very, very thoroughly. Very thoroughly. And I suspect since we have like about 15 people today at this moment, everybody who's watching knows about this. So I'm not going to talk about Japanese, play, the whole carry trade operation. But yeah, it is important. You're right, Mr. Manjunath Madhubal. There's a question on LinkedIn. Mr. Gaurav Chaudhary asks, what do you think about IoT sector of EVs? IoT sector, of course, that calling IoT is the yesteryear's name. Now it's called robotics and artificial intelligence in EVs, right? That's how people refer to it. That's how you bump the numbers. Of course, it's a green field. You'll have to be a bit more specific when it comes to the question, Mr. Chaudhary. But yeah, it is green. It is green. It is green and has been for a very, very long time. Anyway, so moving on, folks. Did you know that Air India was flying a plane 8 times without license? Right? So, under investigation by DGCA, expired airworthiness license flagged only after 2 days. Airline says involved officials suspended. So, Air India essentially was flying a plane, right, without airworthiness certificates. They what are they trying to do, man? Now, this is what we call it as Mr. Peter Drucker's recall, right? Culture eats strategy for breakfast. So even if Tata overtook Air India, right? Even if it did whatever it could to turn the operation around, the people who worked with Air India were still working with that Sarkari mindset, right? And that, if that is the culture, right, this is what happens. Lapses at every level, right? So Air India has been literally fighting fires ever since Tata overtook it, including the crash situation, including everything, right? Every unfortunate thing that has happened with Air India is starting to emerge as a cultural issue. Why would you run a plane knowing that its certificate has expired? How could you be not looking at basic SOPs when it comes to, and how does firing of these people help, right? That is also a very big question, very important question. But this is what's happening. Are things gonna be different for Air India now? Very hard to say. Very hard to say, right? Because culture eats strategy for breakfast. The people are the same. Tata owned Air India operated on multiple occasions an aircraft that was not airworthy, potentially risking the safety of passengers. A 164 seat Airbus 320. My God. My God. Moving on, folks. No time to chill. 30,000 crore IPOs to fire up Dalal Street. Around 25 listings in pipeline compared with 9 that took place during November. So a lot of IPOs happening, of course, right? Good IPOs, great IPOs, big IPOs. Meesho is one. ICICI Prudential Asset Management Company, a 10,000 crore IPO, is another. CleanMax Energy Solutions, AI-driven Fractal Analytics. Whenever I read, so Fractal Analytics, right? The company is called Fractal Analytics. It's not AI-driven Fractal Analytics, But why does it have to say AI-driven Fractal Analytics? Because that's when that's how it'll get the multiple. You understand? So it's like e-commerce company Meesho. It's not AI-driven e-commerce company Meesho, right? So when it comes to IT services or analytics company Fractal Analytics, right? It should not be AI-driven, but it is. So Fractal is obviously trying to ride the AI wave by listing and calling itself AI-driven yet again, again and again. So this is a very weird situation. But yeah, a lot of IPO is going to happen. Mr. Rajat Mittal says, my brother, this should change as a 3-year employee lock-in should end in a year or so. Well, that's insightful. Correct. As a part of the acquisition, there was a 3-year lock-in when it comes to Air India employees, right? So maybe as the lock-in period ends, Air India, will be looking at really going pedal to the metal when it comes to changing the employee culture, which is code for firing people, right? So let's see what happens there. Moving on, folks. GST collections rise. We've talked about that. UPI collections dip after record festive highs. No surprise there. Yeah. More states lay out carpet for semiconductor units after a new crop of states is popping up as lucrative investment destinations for electronics and semiconductor manufacturing. Odisha, Jammu and Kashmir, Madhya Pradesh providing opportunities for the industry now. Jammu and Kashmir? Whoa. That's that's interesting. Moving on, folks. Mr. Albinder Dhindsa has given an interview. He says, quick commerce will soon face questions on cash burn. So he's basically indirectly attacking Zepto and Swiggy. So he says public markets are not for business model experiments. Public markets are for tested business models and how they function. Right? This is yet again a dig on Swiggy trying to raise 10,000 crores through the QIP, and then 2,000 crores with the stake sale in Rapido, then Zepto trying to go public with the 5,000 crore IPO, and so on and so forth. So he says that we showed profitability, a few quarters ago, to be able to prove to the market that we are doing the business right. Other companies who are expecting public markets to bail them out, it won't be pretty, because the model will inherently ask questions and the public markets will inherently scrutinize to the levels not seen before. Now, what is this, folks? Do you know what this is? This is called uh, this is called the incumbent talk. Okay, so since Blinkit is holding about 50% of the market share with 18,000 crores in cash, right, through the parent Eternal, and rest of the players are essentially looking at a weaker cash position and a weaker market share. It's talking about how public markets deserve to scrutinize these people for trying to raise money. The fact of the matter is that even Blinkit is not having a profitability profile to boast for, right? I mean, it's the company, however, it has tried to position itself profitability wise. It's basically been a financial trick, right? It has always been a financial trick. So when Mr. Albinder Dhindsa says this is an incumbent trying to, essentially muscle out these smaller players, because Blinkit knows that the real problem isn't Swiggy or Zepto. The real problem is Flipkart and Amazon, who are going to muscle their way in, and most likely with an acquisition or so. And then when that happens, its 50% market share will be in trouble and nobody makes money. The beauty is, Grofers, now Blinkit, has never made money, never sniffed money from a distance. And it is very far from sniffing. Now, its profitability profile is definitely better than everybody else. You got to give them credit where it's due. However, the model has inherent problems, right? And muscling out competition or trying to urge the public markets to scrutinize them more probably won't do it, right? Probably won't do it. So that's what's happening. Let's move forward, folks. Speaking of moving forward, folks, we are coming towards the end of the first month, right, of having the patrons play. So my point is, we'll have to pay the intern $7,500 as we discussed. We raised some 10,000, 9,700 last month. I haven't yet taken the StreamYard, uh, you know, service premium, because I was smart. I wanted to take that only when people actually came forward with their interest in being a part of the TV thing, right? The panel discussion. Since then that didn't happen, I kept it free, so I saved that money. But we'll still have to continue paying the intern so that the episodes can be indexed, and the shorts can keep coming. The shorts are building up. We're releasing shorts. You must have noticed. So patrons, please do the needful. It's so awkward to ask for money. But yeah, Thinkers Frequency needs your support. Moving on, folks. There is a report on Mercer, a PR piece. Mr. Adarsh Hiremath, Indian origin tech entrepreneur, right? Mercer is looking at talent play, AI. It's essentially testing AI models with humans and stuff like that. That's what they do. They've raised a lot of money, $250 million. They're worth like $10 billion now. Very young company, 22, 23-year-old people. So, let's see what happens with that. A lot of political chit chat, which we best not discuss, right? Moving on. '69 launchpad along LOC, about 120 ultras ready to cross, says the Inspector General of BSF. we are seeing constant movement along LOC. Now, this is trouble. This is very, very big trouble. Not no respite when it comes to India-Pakistan exchange, right? This will invariably strengthen the case for defense companies in India, which is an investment opportunity. Let's move forward, folks. We've been talking about that for a very long time now. Industrial output, 14-month low in October. We've talked about why. Center seeks House nod for net extra 41,000 crore expenditure. 41,000 crore government expenditure. Why? Because the fiscal deficit target is still in place, right? We expect some 4% to be the fiscal deficit play, and that is on, right? So the supplementary demand for grants are being pushed. 41,000 crore in government capex will help a lot, right? Government capex has usually been the fuel for Indian economic growth. Private capex, not so much. Government capex has single-handedly steered Indian economy for a very long time. This is no surprise. But the good news is, despite all that government capex, India has been able to keep the fiscal deficit target intact. And that's what's looking at. So key proposals are 18,000 crores in fertilizer subsidy. That is definitely a good news for fertilizer sector. 2,500 of extra transfer to Jammu and Kashmir. This is freebie stuff. 9,400 crores for compensating oil firms for under recovery in LPG supply. Okay. 1,500 crores for higher education. 2,000 crores for development package for Manipur. That was the 41,000 crore play. Total gross expenditure spending in FY25 is 1,32,000 crores. 1,32,000 crores is roughly about 14 to 15 billion dollars, and that's what's going on. Moving on, folks. Manufacturing activity 9-month low. Of course, it's peaked and then it's going down, right? We've talked about the PMI coming from 59 to 56.8. Moving on. November GST mop-up grows slowest in fiscal due to race revamp. Still growth, that is a good news. GDP data based on dynamic trends, revised series to be launched in February. So what's happening is that the GDP numbers that we get right now, they have a base of 2011-12. Did you know that? So 2011 and 12, that's the base for GDP. That's where we count the inflation numbers from and so on and so forth, right? Now that base is going to change from 2011-12 to 22-23. And that is going to lead to a lot of new numbers. So just be ready when people start coming out in political firestorms about how government is cooking GDP numbers because they changed the base. But that's not how it happens, right? The inflation base, the base has to be changed for calculations to make sense, right? You cannot keep running on the 2011 base. And then there are new things that are added when it comes to the data collection. That is the whole UPI play, the transactions and so on and so forth. So India's GDP calculation is based on updated and dynamic trends such as UPI, e-commerce, transport, food aggregators, electric vehicles, officials said, amid concerns over quality of official data. So IMF gave, a bad rating to Indian quality of data. It says Indian National Account Statistics a C rating, indicating shortcomings that somewhat hampers surveillance. Other data sets, including price indices and so on and so forth, received a B rating, meaning they are broadly okay, but still gaps. Now, IMF ratings on India data sets needs to be looked at very, very, skeptically, because no such ratings exist for United States data sets, and they are pure bullshit. Pure bullshit. So US is transparently bullshitting its numbers when it comes to jobs and employment and inflation and so on and so forth, right? That's just very, very transparent. It's political firestorm that's making it clear that these numbers are not reliable. But no such scrutiny on US, of course, from IMF. India is definitely getting muscled in when it comes to data, adequacy. Would adequacy be the right word? Yes, it would be. So that's what's happening, folks. Since production approach estimate is based on a robust set of indicators in terms of timelines and reliability, GDP by production approach is considered as official estimates, right? Moving on. Power consumption down 0.8% in November. That's what happens in winter. Power consumption goes down. Moving on. Railways freight loading up 4.2%. That's okay. FDI equity inflows are going up, folks. 20% in July-September quarter. Now, FDI, FPI, that's always been a very important play for India when it comes to attracting foreign capital for investment, right? FDI is indeed picking up. Increased to $16 billion in July-September quarter. Data released by DPIIT says. FDI inflows total $13.6 billion in a year ago period. So from 13.6 to 16.4, right? In the first half of 2025-2026, FDI inflows were up 18% to $35 billion, with Singapore being number 1 and US being number 3. They didn't mention number 2, where that came from. So total FDI, which comprises equity inflows, reinvested earnings and other capital, increased almost 20% to 23 billion from 19 billion earlier. This is obviously a very good news. The services sector include banking, financial services, insurance, outsourcing, as well as research and development got the money, right? Among sectors, highest inflows were computer software, hardware, services and trading at 9, 5 and 2 billion respectively. So that's the constitution of the money that India is getting, a diverse set, and that's good news, right? Speaking of good news, folks, President Murmu, Draupadi Murmuji, she has said something very, very insightful. Are you ready? Are you ready, folks? Okay, drum roll, very insightful. If she wouldn't have said it, we wouldn't have known. Okay, so she said, expand footwear business to boost exports further. She said, expand footwear business to boost export further. That's what she said. She said, now she was, mind you, she was giving this lecture to FDDI, the Footwear Design and Development Institute, right? And she said that India is already a major footwear exporter, but it must expand the business if it wants to boost the exports further. Now, this is what I call a killer insight, right? This is very similar to what Madam Nirmala Sitharaman also said recently, right? Focus on transparent and good governance, something of that sort. So, don't the writers do anything? I mean, these people have writers, right? These people have proper bunch of like bureaucrats who are supposed to help them frame some interesting stuff. What do they do? What do they do? I mean, people, the staff, right? Who's responsible for their addresses to the public. What do they do? I mean, how can they just come out with some stuff like this, man? Anyway, moving on, folks. Winter session is going on, folks. The political winter session, right? So a lot of numbers also come out when it comes to these sessions. Some numbers is over 5 lakh gig workers on eShram portal now. Okay. 5 lakh gig workers. 597 PMKK. PMKK is basically Pradhan Mantri Kaushal Kendra, right? Under the development and entrepreneurship play. 597. A bad number has come out. Only 339 crore of black money has been recovered, and so on and so forth. Right? It's just a lot of interesting numbers always come out when these winter sessions are going on. Nobody pays attention to these numbers, of course, but somehow they are very important. So, an example: household debt falls sharply in FY25. Okay, household financial liabilities are estimated to have fallen sharply to 4.7% of GDP from 6.2 earlier. So 6.2 to 4. Now this is very important. Household debt is a very big indicator of what might happen to the consumption economy in the future. It's a leading indicator for the consumption economy, right? Household debt. If it's going down, if that debt is getting pared down, that is very, very good news. But nobody gets to notice these things, right? So that's what's happening. In absolute terms, household financial liabilities stand at 15.7 lakh crores from 18.18 lakh crores. So that's what's going on with the household debt situation. Speaking of financial outcomes, microfinance is proving to be a hopeless situation. The founder of a very big microfinance organization, so I'll tell you, Madam Padmaja Reddy, right? Madam Padmaja Reddy is kind of a financial legend, a woman leader, not just a woman leader, true financial behemoth, right? Padmaja Reddy, who built a formidable reputation in micro lending, has decided on a gradual exit from unsecured business by the end of this fiscal. She says, I have no hope left in microfinance. So she says, I have no hope left in microfinance. Why does she say that? She said it because everyone chased the same borrower, and therefore the discipline that was once a hallmark in microfinance was lost. The borrowers are now not in a position to repay, making it a structural crisis. That's what Madam Padmaja Reddy says. So she is basically now going bullish on gold loans. You know, everybody's going bullish on gold loans, of course. Gold loans, when it comes to target, is to Kirtana. She's basically running a company called Kirtana. 95% of assets under management, gold loans contributing about 95%. It is dispersing 250 to 300 crore loans against jewelry every month. The target is to become a 4,200 crore company. This is like 99.5% is owned by the promoter in this case. She was the founder of Spandan Murthy, right? She was moved away from that company due to some concerns. But now she's building this particular play. So that's what's going on. Very, very interesting play when it comes to the gold loans and Madam Padmaja Reddy, right? Quite a legend. Quite a legend. So that's what's she might just be looking at going public with her company as well. Mr. Sumanth Kumar has a comment. As per an RBI report, middle class savings are at a 50-year low. Middle class savings are at a 50-year low. Okay, I have not read this. Why didn't I read this? Middle class savings at a 50-year low. That sounds... Household savings at a 50-year low. That was 2 years ago. That report was a 2-year ago report. But I don't see anything like that. I don't see anything like that. This number sounds a little shaky. You know why, Mr. Sumanth Kumar? Because 50 year, when it comes to savings, when it comes to 50 years, you'll have to essentially track multiple currency variations as well. How did they factor in inflation? It's very, very hard to trace the savings with a 50-year horizon. It's just very, very hard. Everything has changed when it comes to even the fundamental structure of money in the last 50 years, right? 1991 happened. Before that, crashes happened. Many, many crashes happened. Rate cuts happened. Quantitative easing happened. Tightening happened. How do you know when it comes to the 50-year? How can you like judge savings when it comes to 50 years? 50 years is what? 1970s? So are they saying that in absolute rupee terms, Indians have saved less money when it comes to a person back in 1970? In 1970, our per capita income was what? In 1990s, it was about 10,000 rupees per year, right? Not even 10,000 rupees a year, less than that. 10,000 rupees a year. Yes, in 1990, that was the per capita income. Right now, the per capita income is what? $2,800. $2,800 in current rupee terms is what? Uh, 2 lakhs 60 bucks to 2 lakh 60,000 rupees. So from 10,000 rupees to 2 lakh 60,000 rupees in per capita income, and our domestic savings are lower than that, right? That is slightly. I'll have to read the report. If you can share the source of that report, I'll be very happy. But for me, prima facie, it looks not really good. Not good. Anyway, India is looking at boosting its organic food exports to 2 billion by 2030. $2 billion, not a lot of money, not a lot of money, but for organic foods it is a lot of money. So where are we currently when it comes to these numbers? India's organic food exports have grown to $665 million in 24-25 from 213 million in 2012 to 2013. So 200 to 600, that's basically thrice in about 12 years, not growing a lot. But yeah, Northeast is a very big source for organic. People in agriculture with deep experience in agriculture have always told me that the whole organic spiel is a fraud, right? You cannot grow anything without good insecticides, pesticides, some, very little amount of basically the growth chemicals. And whenever, even if you don't use the growth chemicals, if you use just insecticides and pesticides, you cannot call it organic. So, and that sounded very, very logical to me. But still, I hear a lot of good news about around organic food. So let's see, right? $2 billion target by 2030, currently at 665 million. That means it tripled in 10 years, in more than 10 years, in 12 years. But it's gonna triple again in just 4 years. Triple in 12 years to triple in 4 years. So they're basically looking at tripling their growth, not just tripling the absolute sum, but tripling the growth of organic food exports. Wow, that is a bullish target, no? What do you think? Moving on, folks. NCLT, okay, yeah, that's not important. Steel panel meets companies on import substitution of high value products. Focus on local manufacturing of items used in automotives and transformers. So, Indian automotives and transformer sector and Indian steel sector still has a lot of import component, right? The high value stuff, we don't do that, essentially. And now we want to, right? Till when are you going to be dependent on China, most likely, and other places for these high value items? Because these companies have been just collecting cash, a lot of cash, and they've not invested in capex when it comes to going up the chain, right? That has been the big problem with India, a very old problem with India. Seems like they want to address it. So, if you look at JSW, Tata Steel, Steel Authority of India, and so on and so forth, are focusing on import substitution of certain high value products used in the automotive industry and the transportation. Some numbers. While the imports of several steel products were smaller in quantum, that of cold rolled grain oriented CRGO was the highest. CRGO application finds in transformers with 90% of demand is met through imports. 90% of a particular type of steel import demand is totally through imports, right? So this is obviously not good. A lot of people are looking at going up the chain finally, because India has, what we've told you, a 3 to 4 year window in which it'll have to, first of all, get independent of Chinese API supplies, right? Then electronic supplies, and then the usual manufacturing play will flourish. So let's find out what happens. Moving on, folks. SEBI brass has opposed public disclosures of financial details, right? So there was a diktat, the regulatory panel, They wanted SEBI, CGM, other top officials to declare assets and liabilities. They said we don't want this because it's going to lead to a lot of scrutiny, a lot of privacy concerns, and so on and so forth. They've pointed out. So rules for thee, but not for me, right? Rules for thee, but not for me. When it comes to SEBI's top brass, they don't want public disclosures. They say that we don't mind sharing the information internally, but disclosing it to public could be a bit of a hassle. Do you sympathize with their stance, or do you feel that they're pretty logical with their ask, right? If they don't want public scrutiny, right? It could be an internal scrutiny, but public scrutiny could be too much. However, the counter view is, what do you mean by internal scrutiny? Didn't everyone know already, right? What does internal scrutiny do for transparency in the whole process, right? So, where do you stand when it comes to SEBI brass opposing public disclosures for their financial details, right? Do you think if these numbers are to come out, you'll find a lot of impropriety when it comes to conduct? Maybe, maybe, maybe. What do you think? Moving on, folks. Rupee is getting hammered, man. 89.79 yet again. Very complicated. Moving on. High yields RBI support could spur FPI into India debt. So the debt market, the yields have hardened and so on and so forth. So it's becoming very complicated. They say that after the rate cut, it's going to be a pause. So everybody thinks the 60%, 40% was the split when it came to economists, right? Whether there's going to be a rate cut this week, this month or not. A lot of people think a rate cut will happen. And then RBI will essentially look at supporting the bond yields in a different way. So I was of the view that the rate cut would not happen because it will disturb the bond market yet again, right? And needs to stabilize. And only the rate cut only makes sense after the US deal has happened, because then it will be a more stable footing, right? But people are saying that a lot of these ancillary problems that will happen after the rate cut, RBI will handle them independently. What do you think about that? Where do you stand when it comes to the rate cut? Do you think RBI is going to go with it this time, in this week itself? What if it doesn't, right? Let me know what you think about this particular situation. Let's move on, folks. Do you think it's going to cut rates? I am of the very conflicting, very complicated. It's not easy, but I think it should not. It should not. Let's see what happens. Moving on, folks. RBI has deployed a VRRR. Surplus liquidity crosses 1.7 lakh crore. VRRR is, of course, variable reverse repo rate auction, right? It is to suck out the liquidity from the system. We've discussed this a lot. A lot of people told me, hey, Nishant, don't talk about these VRRRs, VRRs, and so on and so forth, man. It's first of all very confusing. And then when you talk about it in great detail, it just spins my head. And then you also repeat yourself when it comes to these things, because these things are not easy to understand. So you, just for people's benefit, try to say these things again. So you don't do that. And I'm like, okay, all right. Moving on, folks. Do you agree with that, feedback, folks? Do you think it makes sense? Moving on. Current account deficit eased on service exports, remittances, narrowed to $12 billion. Current account deficit is one of the very complicated things that hurt India 10 years ago, but now it's pretty solid, right? Z Entertainment announces more layoffs. Z Entertainment is India's own succession story. Have you heard about it? Do you know about it? India's own succession story. The Goenka family is the Rupert Murdoch family of US. Succession is the HBO drama, one of the most well-regarded shows of all time, right? So Z was trying to merge with Sony. It was supposed to be a $10 billion company. Sony wanted to merge because you know what's happening with TV, right? We've discussed it a lot. But Sony wanted Goenkas out of management because Goenkas have a history of fugazi, right? So Goenkas have a history of playing fast and loose with regulations, compliances, and law essentially. They have an old way of doing business, of course, which is very necessary when it comes to media. So no blaming them, of course. A lot of respect to those guys. But Sony wanted them out, and what they were trying to do in their typical andaz was that they were just stalling it. So Sony said, you're gonna go out, right? So you're signing the papers, right? Yeah. We're gonna do that. We're gonna do that. We're gonna do that. So they just kept delaying, hoping that Sony forgets. And Sony agrees with Goenka's in charge, right? And Sony just backed out at the last moment. They didn't expect that, but it did. And then Z and Sony since then have been independent companies. Now Z is obviously in trouble, right? The company is in deep trouble. Every TV company is in deep trouble. TV as an industry is in deep trouble. We've talked a lot about this. Now it's gonna have layoffs. Very, very sad, but that's what it is. Moving on, folks. There is a concern about ministries and drug data exclusivity. Do you know about that? So, ministries have been deliberating on drug data exclusivity when it comes to. So, drug data exclusivity is basically a complicated play, but the crux of it is that if it is allowed, it becomes difficult for generics to operate and function and grow. If it is not allowed, right, it becomes good for the big companies. If it is not allowed, it becomes bad for big companies, right? Because they invest a lot in R&D and their research comes out and so on and so forth. So it hurts the incumbent. In the other case, it hurts the generics and the small business operators, the small pharma companies. What do? It's kind of a Kobayashi Maru situation, right? So that's what's happening. Regulatory rift. Issues raised by pharma MNCs. India should be consistent with global best practices, right? Data protection of undisclosed tests is a form of intellectual property protection, right? It provides incentives to conduct lengthy, expensive, multi-phase clinical testing. Data protection should be effective from the date of marketing approval, right? So that's what they are saying. Against exclusivity, concerns raised by domestic pharma companies, delayed availability of generics and biosimilars, higher treatment cost and reduced patient access, loss of competitiveness and export opportunities, and severe impact on MSMEs. So that is the to and fro of that argument. What do? Do you support the big companies? Do you not? The answer is obviously don't support the big companies, right? Increased scrutiny on big companies, especially pharmas, can never be a big news. Can never be a bad news, because these people have a history of doing very, very shady things, right? So more access to their data and their studies could open a Pandora's box. But that's just my colored view of the situation, because you know my history, right? Other than that, it's a very complicated debate which is happening. So let's see what happens. Cough syrup row puts regulators on overdrive to test pharma products. That's very necessary. We've talked a lot about this, the cough syrup fiasco, unfortunate tragedy that unfolded. Seems like the babus are working. Joint inspections rise, companies too quick up quality checks. This is the kind of bullshit that happens in India only. Okay? So after cough syrups killing people, after actually people and kids dying due to Indian Babu Shahi's faults, right? The corruption, the laden corruption, the brazen corruption, right? What people try to do is, oh, now we are doing the right work. Now we are doing the inspections. Now they're doing the quality checks. This is the bullshit that only happens in India. No accountability, no remorse, no retribution, no punishment, no deterrence for bad behavior, just dressing up of proactiveness, right? As a response to tragedy. It happens only in India. So that's exactly what's happening. Lab volume spike, liquid oral testing to rise, 120 batches a day. India liquid syrup market at 24,000 crores, right? From 16,000 crores in 2021. So 16,000 to 24,000 crores, that's the syrup market. liquid syrup market. How much is the growth, man? Pretty amazing growth, right? Very, very amazing growth. 16,000 to 24,000. This thing has almost grown by uh, one third, right? 33% in 3 years. Wow, holy shit. That's a lot of growth, right? But what they're trying to say is now we are doing the testing, sir. Demand for gas chromatographs source over 100 units and so on and so forth. It's just so disgraceful. No punishments, nobody got caught, nobody got punished. Business as usual. Dressing up is the name of the game. Moving on, folks. What's in it for others? So there's a big report that has been published which says conventional rich list ranked people by the wealth they amassed for themselves. Now a new measure is how much that they've created as wealth for shareholders, right? So they're talking about, let's say, if Tatas have created some wealth for themselves, right? Wealth created for investors, and group market cap, their market cap is 28.4 lakh crores, and the wealth that they've created for shareholder is 13.9 lakh crores, because that's the shareholder split, right? The whole trust versus shareholders. So they've painted out the whole rich list from that, and in that list, Tatas are number one. So Tatas are the richest when it comes to creating shareholder value. Then comes Ambani's. Can you guess the third one? Right? Uh, there is Tata's number one. They've created a lot of shareholder value. Then comes Ambani, 23.4 lakh crore and 11.9 lakh crore is the shareholder value created. Who could be the third one? Can you guess? Third ones are the Bhartis. No, not Adani's. Bhartis. Sorry about that. 13.9 to 6.8. And there's this whole circle, a pretty big report that they've created, right? Adani's, Mittals from Bharti's, and then a lot of other people. So let's move on with that. You know what? The new age businesses will be up on that list because they hold very small amount of shareholding themselves. So whatever market cap growth that happens in a new age business, a VC funded play, is usually shareholder value. So they're gonna look good in this this rich list, right? This was also one of the biggest arguments that Mr. Jeff Bezos made in his last letter to shareholders. He said that we've created a lot of value from whatever I've earned is a very small fraction of the value that I've created or that Amazon has created for people. And then he quoted examples of the market cap and so on and so forth, right? Very interesting play. Moving on, folks. Manufacturing is moving from static to hyper flexible automation, says the CEO of Siemens Digital Industries, right? He says India needs to leapfrog manufacturing. If it copies traditional models, it will not be able to catch up. Well, thank you. Manufacturing World Guide is going from pretty static automation to hyper flexible automation. Tomorrow's factories will be adaptive. Well, no surprise there. Tomorrow's factories will also have very little component when it comes to human, you know, involvement because of all the automation that's rapidly transforming warehousing, by the way, right? So a lot of pilots are happening, and 2026 is the year when all that comes to the fore. So let's see how manufacturing essentially maintains its particular place in the society as an employment generator. Moving on, folks. Well, we've talked a lot about the geopolitics, so we're not going to repeat ourselves. And with that, we come to the end of the 130th episode, 183rd episode of Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis, right before we punch in. I hope you had fun. I hope you learned a lot. I learned the best I could have, right? And that was thanks to Madam Draupadi Murmu when she said that exports are already good, but in order to make exports even better, you'll have to expand your industry, right? That was the key insight for me today. I don't know about you, but it was always fun, folks. I should thank Mr. Abhishek Sharma, Mr. Magesh Mani, Mr. Manjunath Madhabal, Mr. Rajat Mittal, Mr. Sumanth Kumar, then on LinkedIn, Mr. Gaurav Chaudhary, and everybody else who joined, right? It's 9:30. We should punch in. I wish you a beautiful day personally and professionally. I'll see you tomorrow, same place, same time, hopefully. Please take care, have a beautiful day, and also contribute to Thinkers Frequency, the whole patrons thing. We need to keep the intern doing the good work that he is doing, right? So don't keep up your support, folks. Cheers. See you.